Hey guys! Hope you had a profitable week last week. Nasdaq was up nearly 5% last week and one of the best weeks for the index in quite some time. Gold has closed at an all-time high of $2,508 and the dollar has been sold. Today we are doing a quick technical analysis on Nasdaq, gold, and DXY. We also present two interesting charts to bring to the attention of our followers. As always, we want to provide the best analysis for our followers and we want to point out the best trades so our followers can benefit from them. We are doing this analysis in good faith. We want this channel to be transparent and open and also responsive to our followers. We would value your comments a lot, and so please comment and provide feedback, and we would very much appreciate that. However, when we are investing, there are always risks involved and we should be aware of that. These are our own ideas and not investment advice. Also, at the end of the video, we will include a motivational quote which changed Muffet's views on life. I think all people should listen to it, and that's why we will be including it in this video and most other video we will make in the future. Nasdaq. This Nasdaq analysis is based on both Muffet's experience and Inner Circle traders' market insights from whom Muffet learned a lot. ICT says that the best charts to watch are the weekly chart and daily chart. Both will provide context for our bias and also find areas where the market makers can run to stop out traders. Here we have the weekly chart of Nasdaq. The Nasdaq has rallied 2,200 points or a 12% move in 2 weeks. So where can it go next? We look for draws on liquidity. These could be old highs and imbalances, the ICT fair value gap or FVG. We have outlined the FVG on the chart. So that will be the draw on liquidity. But the prices are currently extended. So may most likely either have consolidation or a bit of retracement. However, we do not think that the retracement will be very deep. If we look at the strength of the move, this is what we predict. Also, the price might just continue going higher to the FVG. This is possible but less likely. The important driver next week will be the Jackson Hole Symposium. Powell will deliver a speech which will move the market. On the daily chart, we have outlined all the daily FVG. We think that the market will consolidate from Monday to Wednesday, and then there will be a stop hunt to one of the FVG either before or after the Powell speech. Price will be very bullish if the market never trades to the lower FVG. The lower FVG is our last support. If the prices are not supported by the lower FVG, then the bullish forecast will be invalidated. If anyone has missed the rally, the lower FVG would be the best place to go long on stocks which are outperforming. Although it doesn't guarantee good returns, it will provide the best risk-reward area for entering a position. We hope this analysis was useful, and if so, please subscribe to the channel and like the video to help the channel. Dollar Index. If you were following our channel, we had been bullish on DXY and we were long. But let's look at the monthly chart. This gives us the best context. On the monthly chart, the price was in consolidation for an extended period of time. Then there was a big move up. Price has retraced off the big move and price is consolidation again. If we draw a Fibonacci retracement on the move, we see price being supported by the FVG at around 50% of the move. So as long as the FVG supports price, the long term can still be considered bullish. But the short and medium-term market action is bearish. So the price might still fall and retest the FVG one more time. The EMAs are moving up and the 50-month EMA sits at the top of the FVG and will provide support to prices. If we look at the weekly chart, price took out the swing low at 103.40 about 4 weeks back, and price has traded down and taken out the swing low at 102. Price is likely to test the FVG below in the next 2 weeks. It remains to be seen whether the FVG will provide support or price will trade through it and test the monthly FVG again. We expect the monthly FVG to at least provide a bounce. So overall, currently the short term is bearish on the dollar. Gold. We have been bullish on gold since February of this year. We have been right on this. Price has closed to all-time highs. Price is now up about 25% this year. On the weekly chart, if we use the standard deviations of the last stop run, we have a projection of around $2,600. We think most likely that will be the move for the year, as that would imply a price run of 30%. This is just a premise and not a forecast. This might take some time to play out. We need the 10-year yields to continue falling for the move to the $2,600 target. If we look at the daily, the shaded area will likely be supported for the longs. But the volatility around the Jackson Hole Powell speech might result in big stop runs. We would advise not to trade gold next week. 10-year yields. The analysis on the 10-year yields has not changed. We are expecting lower prices and test the 3.25% line. Any rally would find resistance at the FVG drawn above. Finally, we want to highlight two really strong charts to take advantage of any weakness next week to go long on. This again is our own view and not investment advice. Both the stocks are showing high relative strength compared to the overall market. But the important thing to remember here is technical analysis only provides one part of a stock analysis. Investors should be confident of the fundamentals of a stock before deciding to take a trade. The first one is Meta. The monthly chart shows a very strong uptrend. The price has taken out the previous high made in 2021 and has rallied without a retest. This shows that investors are very bullish on the stock. For long-term investors, the best place to go long on Meta would be at the shaded zone. Price usually will retest at some point. We have to probably wait for next year before this happens. But if you don't want to wait that long, why not sell a leap put between $380 and $350? Let's look at some prices. Here is the options chain for the January 2026 put options chain for Meta. The blue box shows the strike price of the put option. The pink box shows the last traded price and the black box shows the open interest. The open interests are highest in the $400 and $350 puts. The last price that the $400 put has traded is around $30 and the last traded price of the $350 put is $18.90. When we sell the put, we are promising to buy the stock at a particular price, which is the strike price. The put buyer is buying the put as a protection against losses, or he is speculating that the Meta shares will fall below his strike price by the time of expiry. The put seller on the other hand wants to enter Meta at a lower price than it is currently trading. He is fundamentally bullish on the stock and is happy to own the stock if the price falls to the strike price. He is acting as an insurance agent. He takes the risk if the price of Meta stock continues to fall below the strike price. As no one can predict price, it is important that the put seller has done proper research and is very confident of the fundamentals for Meta. For taking the risk, the put seller receives the premium. The put seller has to decide at what price he is happy to own the stock long term and then sell the put accordingly. As we can see, quite a few people are interested in the $400 put. If we sell this put, we collect the $30 premium. As each option is worth 100 shares, we get $3,000 delivered to our account immediately. Would that be not the best way to enter Meta shares, if we are very positive on it? The sold option loses time value premium and will expire worthless if the Meta shares never reach $400. In this case, we get to keep the $3,000. So in a way, we get paid for waiting patiently to enter into Meta stock. If we look at the weekly chart of Meta, you can see that Meta stock never broke previous swing low, whereas Microsoft share did. What this suggests is that the Meta stock is showing relative strength compared to Microsoft. And Meta is more likely to take out its all-time high compared to Microsoft. The second stock we like is in the senior living REIT sector. We have already covered this stock and it is on our watch list to buy. This is Welltower Inc., which is one of the largest senior living REITs. We were hoping to buy around $90, but the price never came to that level. In fact, the price never retraced at all during the market correction. The stock is currently trading at around $116. If we compare Welltower against S&P 500, we can see that the price has potential to go up to the gas highlighted here. They have positive fundamentals from the aging population and they are less levered compared to other senior living REITs. It is certainly worth a look and keep on the watch list. We will look for entry on this stock in the model portfolio if price retraces to the 20-week EMA. Now a quick look at our model portfolio. We started the portfolio at the right time and so we are up quite a bit. Most of the positions are in profit and the total profit currently stands at £1,299. This is a very good start considering that we are only using about £8,000 margin of the £30,000 available. We also entered 2 new positions. The first one is Rio Tinto, which is an Australian miner which is near 4-year low and yielding 7%. The stock is weak due to falling iron ore prices, but we are approaching value territory. Price can still fall further and we will add to our position. Over the long term, this is a good stock for exposure to both iron ore and copper. The second one is an ETF focused on Indonesia. Prices are currently 20% off because the Indonesian economy closely tracks the Chinese economy. But in the long term it has positive demographics and also exposed to commodities. That's all for this week. If you found this content useful, then please like the video and comment on it. Thanks for watching.
Far too many of us worry ourselves into an early grave trying to cope with things in our own little personal ways without learning a few great laws that will take care of everything for us. These things we bring on ourselves through our habitual way of thinking. Every one of us is the sum total of his own thoughts. He is where he is because that's exactly where he really wants to be, whether he'll admit that or not. Each of us must live off the fruit of his thoughts in the future, because what you think today and tomorrow, next month and next year, will mold your life and determine your future. You're guided by your mind. You see, the very law that gives us success is a two-edged sword. We must control our thinking. The same rule that can lead a man to a life of success, wealth, happiness, and all the things he ever dreamed of for himself and his family. That very same law can lead him into the gutter. It's all in how he uses it, for good or for bad. This is the strangest secret in the world.